If I never buy another real estate property, how long would it take for me to make my portfolio go from 400 million to a billion? And at 5% inflation, it would take 19 years. That would put me at 55. So if I never buy anything at 55, all the $1 billion worth of real estate at a 5% inflation rate. I think it's going to be closer to 10%. And if it's 10%, then I'll do $1 billion worth of real estate. Again, if I don't buy another single transaction in the next 10 years. So in 10 years, I'll grow from $400 million portfolio to $1 billion just due to inflation. It led me to think inflation is this invisible tax. And it's really, really bad if you don't have real estate or assets. And unfortunately, this invisible tax is also something that is invisible when it creates wealth. And a lot of real estate investors talk about, all the benefits of taxes. They talk about all the benefits of real estate with how efficient cash flow is today. But when I talk to real estate investors and people that aren't in real estate, I don't think they really understand what a big thing inflation does for building wealth and how it can continue year after year after year, grow your portfolio faster than you think. So let me start with price inflation. So if you had $10 million portfolio, let me tell you why price inflation, and let's just use my example of, let's say that inflation is going to be at 10%, okay? So we're going to grow. In 1 year's time, that 10 million would obviously turn into 11 million, right? So why is that so valuable? Because in a year from now, you can turn around, if you do nothing else, and inflation grew by 10%, sell your property for 11 million. But what a lot of people don't understand is this $10 million property had $8 million of a mortgage, okay? Because one of the greatest advantages if you're buying real estate that has a mortgage that cash flows, all this works towards you. That $8 million mortgage, now that you have $11 million property, here you had $2 million worth of equity. When your property is worth 11, you have $3 million worth of equity, right? It's simple. 11 million minus 8 gives you $3 million worth of equity. Think about that for a second. That is a 50% increase, right, in your equity, in your return. So this is super valuable, and I don't think a lot of people really think about the price inflation has to do with what you own. If you don't own any real estate, this is happening for everybody else. That's why you want to grow your portfolio when it comes to price inflation. However, you also want to have a mortgage. I hear a lot of investors say like, well, I can't wait to pay my mortgage down. You do not want to pay your mortgage off, okay? You always want a mortgage. It's why I refi. Mortgages are, by the way, the interest on it is a tax write-off. But most importantly, with inflation, you can also debase the debt. This one's a little bit more complicated, and I feel like we don't talk about it enough, but it's huge. So let's use this example, right? I have $8 million mortgage, okay? Same example, right? I have $10 million worth of real estate. $8 million is my total amount of mortgage, so your loan to value is 80%. So what happens if inflation grows by 10%? Well, guess what? Your debt just got debased by 10. Which means that in a year, your debt is actually 7.2 million. So I think what's interesting about this is, let me break this down, because I know this is a little confusing. But why it's 7.2 million? Your debt is still 8. But when inflation happens, right, the dollar is worth less, which actually means that there's more dollars out there. So if we wind a year from now, you are going to have more dollars to be able to pay back your $8 million mortgage, which means that the value of the $8 million has now moved to 7.2 million. So not only did I increase my equity to 3 million, so a 50% gain, I made $1 million just because of inflation and the asset value growing. I also made another 800K because my ability to be able to pay back my current debt just got 800K easier. One note here is if you don't have a mortgage and you had $8 million sitting in the bank, guess what happened to you? You lost 800K. That's why savers are losers. Because if you keep money in the bank and it's not invested and you have 10% inflation, your money is being debased, just like this mortgage is. So think about that. If you have $100 in the bank, at the end of the year, you still see the 100, but technically you only have $90 worth of value. Let me go over to the last one over here, cash flow enhancement. This one's pretty easy. Let's use a new number. Let's use cash flow of $10,000, right? So you got $10,000 worth of rent income coming in, other income coming in, and let's just say you have $8,000 worth of expenses. This is your taxes, your insurance, your maintenance and repairs, your cutting the grass, and even your mortgage payment, okay? So you have $8,000 coming in, which leaves you with $2,000 worth of cash flow. What's really, really interesting about this example is that if you, again, have 10% gain in inflation, then this number right here is now 11,000. Now you might be thinking, well, Logan, I mean, obviously if cash flow went up by 10%, then income shouldn't expenses. No, nobody, I mean, you shouldn't. There is bridge debt out there right now, and those people are definitely in a tough spot. But usually you can lock your mortgage in for 5, 7, 10, 15, maybe even 30 years. So in this case, mortgage is locked in. And guess what? Your mortgage is your biggest expense here. And there's other expenses that also go up, but usually not as fast as income. So if your mortgage is locked in and it's set the same, but your inflation income went up by the 10%, maybe it still went up, right? Because some of the other expenses do. But let's just say it went up by $500. So now your expenses is $8,500. So obviously, in this case, now you're making an extra $500 a month. So think about that for a second. You're making an extra $500 a month. You're saving $800K in debt, and you're making another $1 million in value. These are the things that aren't talked about in real estate as much. And these are the things that you want to pay attention to. Because if you are saving your money right now, you're not getting any of these benefits. You're actually losing money because the opposite is happening to you. If you're putting your money into other investments like stocks, you're pretty much staying the same because you're not able to take advantage of any of these. But if you invest your money into real estate, right, you get all the benefits that everybody else is talking about. But one of the big ones that not a lot of people talk about is and by the way, you can't control it, right? The government is the one printing millions and millions of dollars and, trying to keep up with their massive debt and trying to stimulate the economy. Like, inflation is there, but it's taxing people without real estate, and it's significantly benefiting people that do have real estate. And these are some things that you should think about. I know some very, very wealthy real estate investors that have 400, 500 million like I do that don't even understand this. This is just happening to them. So if you understand this, maybe you will consider, like, even in a time like right now, I'm still buying because I understand some of these things. And obviously I did this on 10 million, but it's really fun to look at the numbers at 400 million. Doesn't matter where you are. You could be at $1 million. Just get started. You could be at 250,000. All these three things are adding up for you, and over time you will reap those benefits.